Check. Yo, what's going on, everybody? So we had a banger trade today that I really want to break down. I apologize for the lack of uploading this week. I only posted one video on Monday, but I'm going to be posting another video today, which is going to be going up right now. I'm going to be showing you guys how I actually took the first trade of the week. It's been a slow week, and we made about $600, almost $700 on this trade off pure price action, right? I was looking for my model that I've been breaking down for you guys on my past couple, literally my past 3 YouTube channels, and you know, I had to resort to just good old-fashioned price action, right? Is reading the candle. So let me show you guys what that looks like, and I'll see you on the charts. So this right here is actually the trade that I took, okay? But for us to get here, we have to go to pre-session 9 a.m. So you guys are going to love this video because it's going to be pretty quick. It's going to be a pretty quick breakdown here, and because it was pretty straightforward, right? You guys know that every single time I take a trade, I'm looking to take a trade based on external liquidity going to internal or internal liquidity being swept going to external, right? Now, start off on the daily time frame as always. You guys know that. And I see nothing. I don't have any levels. In terms of candles, right? I can see that every candle in the previous couple of days has just failed. It closed within the day's range, right? So this swept previous daily's low and closed under, couldn't push under. This one swept this one, closed right back above, couldn't push under. So this kind of tells me that price could be slowing momentum, but you got to be careful because not a lot of data, right? So I just kind of went on to the 4 hours. Sorry if you guys hear that. My balcony door is open. It's a train. And yeah, and Haley will let you know because Haley hates that train. So now what you have to go is go to the 4 hour, right? Let's go to session, and this is 2 a.m. taking us to 6 a.m., right? So even at 6 a.m. we don't have anything, but when you go to 10 a.m. we have something finally, right? And yes, I didn't take this trade until after 10. This is pre-market now. This is going into 10 a.m. This is going into the silver bullet. All I have here is the previous day's low and the previous day's highs, right? We're in we're in yesterday's daily range, right? So there's not much to go off of until something is created, until a higher time frame key level is being swept, or fair value gap is being created, an imbalance in the market is being created. And once 10 a.m. closes, we get that imbalance right here, okay? Now, 2 of things are going to happen now. I have an internal and I have 2 externals, right? Price is either going to sweep external liquidity and push up into this internal, or price is going to push up into this internal and push down into the external level, right? No matter what, I'm going to be using these levels here. Being that we've been so bearish, I'm probably leaning more towards price pushing up here, but price is so close to this previous day low. I wanted it to sweep and I wanted it to push up to the H4 fair value gap, right? So this is where we go down to the 15-minute time frame, 5-minute time frame, right? And I'm waiting for price to do this. I'm waiting for price to push up into our fair value gap right here. Now, once price hits our level, I'm waiting for a change in the state of direction, right? That is going to be determined by the series of up-close candles that created that push. So when we have this push, this is the series of up-close candles. This is the beginning of the up-close candles. Price would have to break under here for us to finally go short. Not that ideal, right? So I'm waiting. Price creates a bearish candle, and then boom, price actually creates a new order block right here that we can use if price does what we wanted to do, and that's break back under. Why? Because now price is creating another high. You're going to use a series of up close candles of that high. Price is breaking above this high is what I'm saying, right? Price is actually, for me, how I see this is price is taking out this high that got put in at 9 a.m. or 10:20. Okay? Now, all I'm waiting now is for price to change directions and close back under there. And this is the second confluence. Is price respecting the equilibrium of this fair value gap, okay? So price is respecting the equilibrium of this fair value gap. And now I'm just waiting for one thing. I'm waiting for price to close under, retest, and then break under. Guess what happens? Price doesn't do that. Price breaks under. Now I'm going to wait for the full next 5-minute candle, which is this one, and price disrespects it, okay? Now, there's a little bit of hope. A 5-minute fair value gap is here. So if this gets rejected and we close back under, I'm going short. And it doesn't happen. So now all of this is scrapped, okay? All of this is scrapped. Now I'm just waiting, right? What is going to be my sign? What is going to be my sign for me to take this trade, right? And what my sign was this right here. I had no order block. I had no fair value gap, but I did have this. I did have this level failing to tap into these highs. So Just because we don't have the order block, you have to remember what you do have. I do have a fair value gap being rejected. I do have a rejection of the of the equilibrium of the 4-hour imbalance being retested. I have price giving us a nice reaction. I have price pulling up, and then price pulls back down, making no new lows. But now I'm looking at this, and I'm looking at this as pure price action reading. Okay, price just failed to reach up to these highs, broke back under, and created a low lower than this one. I actually took my entry here. It wasn't the best entry. I didn't over leverage here. I didn't send a lot of money, right? But I actually took my entry for a 2-to-1 right here. Beautiful 2-to-1. Now, why did I do this? It's not based on a fair value gap, and it's not based on an order block, right? My model is scrapped. It's based on pure price action reading. Price pulls up into my area of interest. Price rejects the equilibrium of the imbalance. Price pushes down, disrespects my entry time frame models. Price does create a lower high and create a new low. So what this is telling me is that price is now failing to create a high. This high is not protected. I'm going to be placing my stops up here, no lower, and I'm going to let the rest ride out. Price drops, and I take profit literally around 12 o'clock, just 30 minutes later. This was a beautiful trade. I told you guys would love this one because it's very quick and straight to the point. Sometimes, you have to improvise and, step away from the plan just a little bit, as long as it makes sense. And price dropped very fast to all of our take profits. Thank you guys for watching. I really appreciate it. Remember, I respond to all messages and all emails and all DMs and all comments. Instagram is going to be in the bottom. Email, everything in between, like it always is. Thank you guys for watching. Deuces.